Since Rectangle Pte Limited intend to establish a new company, Rectangle Pte Limited should establish a subsidiary in Malaysia, which will be treated as a different legal entity from the foreign firm. However, although having a new name Nuco, the subsidiary firm still can conduct the same business as them. Rectangle will have a limited ownership interest in Nuco. Since the subsidiary organization is a different legal organization, it will be liable for its local observation, taxation, and reporting responsibility. As a result, even though Rectangle is foreign business, Nuco will be a resident company and will be entitled to tax incentive via the Malaysian Investment Development Authority as a manufactured company. Rectangle Pte Limited shall commence business during the financial 31st December 2019 rather than 31st December 2020 due to the current issue of recent pandemic COVID-19. Generally, COVID-19 started to spread rapidly in 2020 and forced the government to commence total lockdown. This affected the world business so as not to gain profit. As a result, business lost money and the economy suffers. In the end, Nuco will be able to expand its operation in the fiscal year ending December 31st, 2023. As a Nuco objective is to develop their firm after 5 years of operation and invest additional capital expenditure, Nuco will be able to expand its operation in the fiscal year ending December 31st, 2023.
Next, for question 1C. The best tax incentive that can be significantly reduce its tax liability after finishing claiming investments tax allowance is reinvestments tax allowance. The reason is that the eligibility to claim reinvestments tax allowance for manufacturing companies needs to be a company resident in Malaysia, had incurred qualifying expenditure for either expansion, and has been manufacturing operation for at least 36 months, which is 3 years. Rectangle Pte Ltd should claim RA because in 5 years of operation, it will be a company resident in Malaysia and gain some expansion led to increasing in production capacity. Next, for question 2A. Palmca should dispose the old machines by the financial year which ended on 31st March 2020. This is because when disposed of the asset in the current year, it will get balancing allowance, where residual expenditure is higher than sales proceeds. Balancing allowance can be claimed to shelter adjusted income. Balancing allowance also will reduce the statutory income. At the same time, it will reduce the taxable income.
For question 2B, advise Palmca on how to save tax on the disposal of the stamping machines. For the stamping machines, it is advisable to dispose of the machines on 1 June 2021. This is because the disposal of the machines must be done after 2 years of acquiring them. Thus, Palma Berhad can claim all the allowances, including capital allowance, in order to reduce the tax liability. Palma should be aware of the timing of sales, since a minimum of 2 years of ownership required to avoid the clawback of the capital allowance by the tax authority. Therefore, stamping machines should be disposed of after 1 June 2021.
Question 2C asks about state whether Dalmo Group of companies can make use of group relief to reduce tax liabilities in year of assessment 2020 and 2021. There are 3 companies under Dalmo Group, which is Damchi Sdn Bhd, Pamcha Sdn Bhd, and Roba Sdn Bhd. For Pamcha Sdn Bhd, this company may not eligible for group relief as it is loss-making company with a paid-up capital less than 2.5 million, which is 2.3 million. One of the conditions to claim group relief is claimant and surrounding companies has paid-up capital more than 2.5 million. Therefore, Pamcha Sdn Bhd does not meet the condition. For Roba Sdn Bhd, this company also not eligible for claiming group relief because Rubah Sdn Bhd are currently enjoying incentives, which is investment tax allowance, as the company just started claiming the first year of ITA, meaning that Rubah is still in the period of enjoying incentives by the next financial year. Thus, Rubah Sdn Bhd will not eligible for group relief for year assessment 2020 and year assessment 2021. Last one, Damchi Sdn Bhd is eligible for claiming group relief because the company just finished claiming pioneer status after 5 years of operation, meaning that Damchi are currently not enjoying any tax incentives. Since Damchi is the profitable company, it is assumed that company has aggregate income in year assessment 2020 and next financial year assessment 2021. Therefore, Damchi is eligible to claim group relief for both year assessment 2020 and year assessment 2021.
Okay, proceed with the question 2D. Advise Rubah on the best method of financing its new purchase of the new machineries. State your reasons. I would say the best method is leasing method. This is because the lessee, Rubah Sdn Bhd, is able to recover the full amount of cost of leasing in a shorter period as compared with the claiming capital allowances. For the assessment of Rubah Sdn Bhd, the full amount of lease rental is given a revenue deduction in the year of it incurred, since the claim of the capital allowance needs to be spread to various years in accordance with the specific rate.
So we move to the next question. For the question 2E, the question is asking about advice Damsi on which company should be taken over, which is company TSG Sdn Bhd or KY Sdn Bhd, and the method of the acquisition. So for the answer is Damsi should choose TSG Sdn Bhd to expand the business. This is because TSG Sdn Bhd has similar business nature with Damsi Berhad. Hence, the Damsi Berhad will understand how to handle the capital expenditure and how to control, how to address this cost or that relate to the business, because Damsi and Berhad have their prior experience with this issue. And also Damsi also have confidence in their ability to develop TSG Sdn Bhd into a successful firm comparable to what Damsi do with their own. Second, for the method of the acquisition, Damsi Berhad should choose the method of acquisition by share. This is because Damsi Berhad will be subject to any liabilities and any business movement in the TSG Sdn Bhd. As a result, Damsi has the authority or has the right to do the work, to do any task in order to make the SG Sdn Bhd into a successful firm. On top of that, if Damsi choose to acquire the SG Sdn Bhd by shares, the tax characteristics such as unobserved tax losses, tax incentive, or dividend franking credits will stay with the SG Sdn Bhd. And also the SG number Hard is also having is currently enjoying pioneer status in the first year. So if Damsi take over the SG number Hard, they also will benefit another 4 years with the SG number Hard, and resulting to decrease the tax payment. Moreover, after the SG Sdn Bhd has finished their enjoying of tax exemption of 5 years, Damsi Sdn Bhd can claim the group relief loss. If the SG Sdn Bhd experience a current business loss after 5 years, so Damsi can claim the group relief loss to reduce the tax payment. However, there are several conditions that Damsi must meet to experience the group relief loss. One of the several conditions that they must meet to enjoy the group relief laws is claimant and sundering companies are related parties and hold at least 70% of paid-up ordinary shareholding, whether owned by surrendering company or the claimant company. In general, both companies can carry forward their accumulative tax losses and unutilized capital allowance to offset future company revenue. However, if Damsi Sdn Bhd choose KY Sdn Bhd to be taken over, KY Sdn Bhd is a dormant company. The amount of unabsorbed business loss and utilized capital allowance will be ignored if Damsi decide to take off the firm. However, if Damsi Sdn Bhd choose to taken over the KY Sdn Bhd to expand their business, the KY's neighborhood is a dormant company. The amount of unabsorbed business loss and utilized capital allowance will be ignored if Damsi decide to take over the firm. A dormant company basically is one that does not do any business and has no income or for the duration of the base period.